Hey there. Ready for a deep dive into Charles Schwab? We've got a stack of their annual reports here from 2021 to 2023.
Ooh, 3 pretty wild years in finance, right?
You said it. And since we know you've got some big decisions to make,
Yeah.
we're going beyond the surface level stuff.
Right. Dive deeper.
Exactly. To see what makes this company tick.
Absolutely. What's fascinating to me is how Schwab navigated this turbulent market we've seen, from those record highs to suddenly facing a banking crisis.
Yeah. Talk about a roller coaster.
We'll see if their actions match up with their through clients' eyes motto.
Which, by the way, most
Yeah.
people probably just know Schwab for trading. But they've really become like a financial supermarket.
Right. It's not just stocks anymore.
It's not just stocks anymore. They're offering everything, from brokerage accounts to banking, retirement planning, even like personalized advice.
They want to be your one-stop shop, the only financial partner you need.
Exactly. And their client base, it really reflects that ambition, right?
By the end of 2023, they had over 30 million brokerage accounts.
Wow.
That kind of growth. That's
Yeah.
massive. And don't forget about when they acquired TD Ameritrade a few years back.
That was a huge EE deal.
Huge. We'll definitely unpack how that integration went.
Speaking of big deals, Schwab talks a lot about their virtuous cycle. Sounds kind of like corporate jargon.
It does, doesn't it?
But essentially, they're saying that if they take care of their clients, everyone benefits, employees, shareholders.
Even the community.
It's a pretty ambitious vision.
It really is. And it underpins everything they do. Their long-term thinking. They're not just chasing those quarterly profits. They're aiming for sustainable success. That
Indeed.
benefits everyone involved.
Okay, so they've got the grand vision, this virtuous cycle. But you know what they say? The proof is in the pudding.
Let's see it.
Let's dive into these annual reports, year by year. Starting with 2021, it was a roller coaster of a year for the markets. We had the pandemic recovery in full swing, the meme stock frenzy. Everyone and their grandma was suddenly a day trader.
Oh, you are not kidding. Schwab actually calls it the reopening surge in their report. They saw record-breaking trading volume, new accounts opening like crazy.
So how did they handle it? Did they sink or swim?
They stayed afloat. They even thrived. They reported record financial performance that year, which suggests they were able to capitalize on that surge in activity.
That's impressive.
It was a wild time for everyone involved. But even they admit to facing challenges, like keeping up with customer service demands during that period of extreme growth.
That makes sense.
Yeah.
It's one thing to attract a flood of new clients. It's another to keep them happy when everyone's scrambling to buy GameStop.
Exactly, and it highlights a potential risk to consider. Rapid growth can put a strain on resources and customer service.
Good point. So 2021 was a year of explosive growth.
Yeah.
But then 2022 brought a whole different set of challenges, right? The bear market hit. Geopolitical uncertainty was looming large, and the Fed started raising interest rates. Not exactly a recipe for investor confidence.
You're telling me, but get this. Schwab still managed to achieve record financial performance in 2022.
What? How?
I know, right? Revenue hit $20.8 billion, and earnings reached $7.2 billion. They attribute it to proactive communication with investors and their focus on transparency during a time when the market was turbulent.
Interesting. So while others were panicking, they were busy reassuring investors and sticking to their long-term strategy.
Exactly. They emphasized their financial strength and their commitment to weathering the storm. It seems to have resonated with investors.
Makes you wonder if that steady hand approach made them more appealing in a time when everyone else seemed to be losing their minds.
It's certainly something to think about.
Okay. So they weathered the storm of 2022, but then came 2023. And with it, the regional banking crisis. Everyone was on edge, wondering who would be next. How did Schwab navigate those treacherous waters?
This is where their conservative balance sheet really shined. They actually saw an inflow of client assets during that period because people viewed them as a safe harbor.
Wait, so while other banks were struggling to stay afloat, Schwab was attracting more clients.
It's a real plot twist. Their CEO, Walt Bettinger, was even quoted as saying they were prepared with a balance sheet largely holding securities backed by the U.S. government.
Ah, so they were playing it safe while others were taking on more risk.
In a way, yes. And that conservative approach really paid off during the crisis.
But it wasn't all smooth sailing, was it? Their stock price took a hit that year. What happened?
That's because even though those government-backed securities are generally safe, their value can fluctuate with interest rate changes. And remember, the Fed was raising rates rapidly, which meant Schwab was sitting on some significant unrealized losses.
Unrealized losses. That sounds a bit technical. What does that mean exactly? And how should I think about it as a potential investor?
Great question. It basically means that on paper, their investments had lost value. because of the interest rate hikes. But those losses were only theoretical unless they actually sold those securities. Think of it like owning a house. Its value may go up and down with the market, but you don't actually lose money unless you sell it at a lower price than you bought it for.
Oh, that makes sense.
Yeah,
So they were facing scrutiny because of these paper losses, even though they believed their strategy was sound in the long run.
exactly. And this highlights another key theme we see in Schwab's reports, their emphasis on taking a long-term perspective, even when it means facing short-term volatility.
So they weathered the 2023 storm. But were they really living up to their through clients' eyes motto? Give me the concrete stuff. Did their actions match their words, especially during those tough times?
Let's dive into that. In 2023, they emphasized that despite all the market turmoil, their client promoter scores remained excellent. They even pointed to independent third-party sources like J.D. Power, who ranked them highly for investor satisfaction and trust.
Okay, so they've got the data to back up their claims, but data only tells part of the story. What specific actions did they take? That demonstrated a genuine commitment to their clients' well-being.
Well, remember how in 2022, investors were shifting to higher-yielding cash alternatives? As interest rates started to rise, everyone was chasing those juicier returns.
Yeah, who doesn't love a good yield?
Exactly.
Mm-hmm.
But here's where it gets interesting. Instead of trying to hold on to those assets, Schwab actually encouraged this behavior.
Really?
They helped raise awareness of the yield-related products they offered, even though it meant lower revenue for them in the short term.
Wow, that's a bold move. It's like they were putting their clients' needs ahead of their own immediate profits.
Precisely. And that decision really highlights their commitment to this through clients' eyes philosophy. They were willing to sacrifice short-term gains to build trust and loyalty with their clients.
It makes you wonder, did they address whether this long game approach was actually working? Were they able to attract new clients and grow their business, even while prioritizing their existing clients' needs?
We'll delve into that right after the break.
And we're back. Before the break, we were talking about whether Schwab walks the walk when it comes to putting clients first.
Right, like really putting their money where their mouth is.
Made some bold moves, like encouraging clients to chase those higher yields, even if it meant less money for Schwab.
It was a gamble for sure, betting that client trust would lead to those long-term gains.
So did their gamble pay off?
Well, their 2023 report seems to think so. They attracted almost 4 million new client accounts that year.
Wow, even with everything going on in the market.
Even with everything. It seems their reputation for stability and that client focus really resonated with investors, especially during a time when many were looking for a safe harbor for their money.
Okay, so they were attracting new clients. But were they growing at a sustainable pace? Or was it a case of too much too fast?
It's a good question.
Remember, they were also in the thick of integrating TD Ameritrade, which is no small feat.
You're hitting on a crucial point there. Integrating a company the size of TD Ameritrade could have easily distracted them from their through clients' eyes mission.
Right. It's easy to lose sight of the big picture when you're bogged down in the weeds of a merger.
Exactly. But Schwab was very deliberate in how they approached this. They broke the integration down into manageable phases, focusing on minimizing disruptions for clients and making sure the transition was as seamless as possible.
It's one thing to say you're focused on clients during a massive merger. It's another to actually pull it off. Did they share any concrete examples of how they kept clients front and center during this process?
They did. For example, they highlighted their communication strategy, which involved proactively reaching out to clients from both Schwab and TD Ameritrade, keeping them informed every step of the way. They even created dedicated teams to help clients navigate the transition and address any concerns they had.
So they were very hands-on, very communicative throughout the process. Did it work? Were clients generally happy with how the integration was handled?
It seems so. Their 2023 report states that they completed about 90% of the TD Ameritrade integration that year.
Wow, 90%.
And they were on track to wrap up those remaining pieces in 2024. They also highlighted positive feedback from clients who appreciated the clear communication and support they received.
That's impressive. Pulling off a massive integration like that while also navigating a banking crisis and record interest rate hikes. That's no mean feat.
It really speaks to their operational agility and their commitment to balancing growth with stability. They didn't let the challenges of the moment completely derail their long-term vision.
It's clear they've got this client's first thing down pat when it comes to their products and services. But a company's commitment to its values goes beyond just profits and clients, wouldn't you say? What about their employees, the communities they operate in, all that good stuff? Did their actions match their words when it came to those areas?
That's a crucial question. And their report suggests they're putting in the effort to live up to their values in these areas as well.
Yeah.
For example, in 2021, during the thick of the pandemic, they emphasized their focus on employee safety and well-being, even as their business was booming.
So they weren't just talking about work-life balance. They were actually making it happen.
It appears so. They kept most of their employees working remotely, provided support, and even rolled out flexible work arrangements as things started to open up. They also highlighted their commitment to diversity and inclusion in their workforce, and they've got the accolades to back it up.
Oh, really? Like what?
They've received a perfect score on the Human Rights Campaign Foundation's Corporate Equality Index every single year since 2004.
Wow. Every year since 2004. That's incredible consistency.
It really is.
Good. Color me impressed.
Yeah.
It sounds like they're putting in the work to create a supportive and inclusive workplace. But what about their role in the community? Do they put their money where their mouth is when it comes to social responsibility?
This is where it gets really interesting. Schwab has a long history of encouraging employee volunteerism. They've been offering paid time off for volunteering for nearly 20 years.
Really? 20 years?
And it's not just employees they're encouraging to give back. They also highlighted their own financial contributions to strengthening communities, especially those that are underserved.
Giving back to the community is definitely important. But it seems like every company these days boasts about that. What makes Schwab's approach different or unique?
Well, they also emphasized their commitment to staying neutral on political issues. They even acknowledged that it's a difficult stance to maintain, especially in today's polarized world.
It's true. It feels like everyone's expected to pick a side these days.
Exactly. But Schwab believes it's the right approach for their company. They want to be a place where everyone feels welcome, regardless of their political views. It's a bold move, and it really sets them apart from a lot of other companies.
It really does. You have to wonder, though, is it sustainable? Can you really stay neutral in a world that seems to demand you take a side?
It's a valid question, and only time will tell how this strategy plays out for them. But it's certainly a point to ponder as you're evaluating Schwab.
It definitely adds another layer to their story. So we've covered their performance, their commitment to clients, their employees, their communities, and their very unique approach to navigating a politically charged world. But at the end of the day, what does it all mean for someone like you who's considering investing in Schwab?
That's what we'll unpack in the final part of our deep dive. Stay tuned.
We're back for the final part of our deep dive into Charles Schwab. We've seen how they've handled themselves through some pretty turbulent times. But what about their vision for the future? Can they keep this momentum going?
That's the million-dollar question, isn't it? Their 2023 report calls 2024 a final transition year.
Interesting.
They're focused on fully integrating TD Ameritrade.
Makes sense.
And then, as their CEO puts it, unleashing the potential of the combined offering to clients.
So gearing up for a new chapter.
It sounds like it.
But they're not naive about the challenges ahead, are they? The financial landscape is always changing.
You're right. They're not shying away from the uncertainties. They acknowledge unpredictable things like interest rates and investor behavior. So instead of trying to predict the future...
Yeah, good luck with that.
Right. They've modeled different scenarios for 2024 in their report.
Oh, that's interesting. So they're thinking about various possibilities, hedging their bets rather than making bold predictions. What kind of scenarios are we talking about?
Well, one assumes strong client engagement and growth in client cash, which could lead to a potential revenue increase of 11–12%. That's their optimistic scenario.
Double-digit growth. That would be pretty impressive. But what about the flip side? What does their more cautious projection look like?
On the other end of the spectrum, they've modeled what might happen if things cool down. You know, softer client engagement, a decline in client cash. In that scenario, they project a potential revenue decline of 5–6%.
Okay, so a pretty wide range of possibilities. Makes sense that they're being cautious, given all the uncertainties in the market. But no matter what happens, they'll still need to manage their expenses carefully. What's their strategy there?
They're aiming for basically flat year-over-year expense growth. They're being strategic about finding efficiencies, particularly as they complete the TD Ameritrade integration.
Right, they're becoming a financial powerhouse. They've talked about leveraging their scale to drive down costs.
Exactly. They're using that size advantage to lower the expense on client assets, which is a key metric for investors.
Less expensive way to invest is always attractive.
For sure. But they're not just about cutting costs. They've also hinted at some interesting innovation plans.
Any clues about where they're focusing their efforts?
Well, they want to be the best, not just the cheapest. Their reports highlight investments in new technology, especially to improve their digital experience.
Makes sense.
Mm.
Everyone wants a seamless digital experience these days.
Absolutely. They're also expanding their lineup of products and services to appeal to a wider range of investors. They specifically mention things like thematic investing solutions, which give investors access to trends like clean energy or artificial intelligence.
Those are hot topics right now. It sounds like they're staying ahead of the curve. But here's the big question. How do all these ambitious plans, the growth, the cost cutting, the innovation, how does it all fit with their through clients' eyes philosophy?
That's the heart of it, isn't it? Throughout these reports, Schwab reiterates that their client focus remains central to everything they do.
So they're saying that all these initiatives, the technology, the new products, even their international expansion, it's all ultimately about serving their clients better.
That's what they're saying. They see their through clients' eyes philosophy as not just a tagline, but the driving force behind their future success.
It's a compelling vision. But realistically, can they truly maintain that focus as they grow and evolve? That's something for you to think about as you're weighing your options.
It's a good question to ask about any company, really, not just Schwab. And remember, these reports provide one perspective. You'll want to consider other factors. Do your own research. Maybe even chat with a financial advisor before making any decisions.
Wise words. We've explored Schwab's performance, their strategy, their values, and their vision for the future. But remember, the most important part of this deep dive is how you use this information.
Schwab emphasizes a long-term perspective and staying true to its values. In today's world, is that a recipe for sustainable success or a potential vulnerability? That's something for you to consider as you think about the future of your investments.
What a thought-provoking way to end this deep dive. We hope you've gained some valuable insights to help you navigate the world of finance. Thanks for joining us.